In this video, I want to give you an introduction to the quantum tick speedometer indicator. And as the name suggests, it is an indicator we developed for one specific type of trading, which is using tick charts. But the question you may have is, well, what are the advantages of tick charts? Why do traders migrate to tick charts in the first place? So let me start there and answer that, and perhaps explain the advantages of trading on tick, which is why a lot of traders do ultimately migrate there from. We all start with time-based charts, but a lot of intraday traders will ultimately migrate towards trading using tick charts, which have tremendous advantages, but also have one big disadvantage, which is why we developed the tick speedometer indicator. So, why do traders use tick charts? Well, a tick chart, like a Renko chart, is a non-time-based chart. And there's one thing that you see on a tick chart, or indeed any non-time-based chart, that you never see on a time-based chart. If you think about it logically, on a time-based chart, whether it's an hourly chart or a 5-minute chart or a 15-minute chart, the candle on that particular chart closes when that metric of time has been met. So when 15 minutes have passed on a 15-minute time frame chart, the candle or bar will close and the next one will start. Now on a non-time-based chart, such as a tick chart, that is not the case. What happens with a tick chart, and I've got two set up here on the right-hand side, I've got a 34 tick chart at the top and a 55 tick chart at the bottom. And you can see that here. This is the 34 tick chart, and at the bottom we have the 35 tick chart. The 55 tick chart. On the 55 tick chart, once 55 ticks have passed through the market, then that candle will close and it will move on to the next candle. And you might say, well, that's awfully interesting, but you know, what does that mean? What it means is this, that the opening and closing of each candle on a tick chart is entirely independent of time, because the metric that governs it is the number of ticks set for that particular chart. So on this particular chart, when we have 55 ticks have gone through the market, the candle closes and it moves to the next one and starts building again, and so on throughout the day, or whatever the setting may be. And the advantage of that is that what you see on a tick chart is momentum. Because each of these tick candles closes at a different time. For example, once 55 ticks have gone through, that could be in a nanosecond, could be in a millisecond, a microsecond, a full second, might be a handful of seconds if it's a slow-moving market, a sluggish market. Then once that has occurred, the next candle is built. So in a fast-moving market, if you imagine at the start of a trading session, and just to put this into context, we are trading on Globex here at the moment. So this is purely electronic. We are not trading with the electronic and the cash markets open. So this is purely electronic on Globex. But once there is momentum coming into the market, which you can imagine at the start of that particular session, once the cash markets come in alongside, there is a huge surge in activity, which is represented in tick activity, represented in volume. And what then happens is these candles will form very, very rapidly indeed. In other words, what you see on a tick chart is momentum. Because on a 1-minute chart, which we have over here, all we would ever see is one candle closing at the end of the first minute of the trading session. But over on here on the tick chart, we might see a whole handful of candles within the same time frame. So in other words, within that 1 minute, there may be 5, 6, 10, any number of candles depending on how fast the market is moving. And that is the key point. On a time-based chart, you never see momentum. You may see oscillation within that particular price candle, but you never see momentum expressed in the uptrends and downtrends on the chart itself. So in other words, what you're actually seeing is inside the market, if you will. It's a disassembling of the time-based candle into its constituent elements, if you like. So a single candle on a time-based chart is then represented on a tick chart, albeit over the same piece of price action with a multitude of candles. So you get a very different construction of the chart, and you see much more of the price action. And that is the huge advantage that traders use for trading, particularly intraday, particularly futures contracts. If you're trading commodities, or you're trading on stocks, or you're trading index futures, whatever it may be. We're on the NQ index future here, but it could be anything at all. This is the advantage of trading on a tick chart. This is what it delivers. It delivers a completely different construction of chart. It delivers much more detail on the chart, and it also delivers raw momentum to you as a trader. And that is the big advantage, because if you're going to be trading intraday, you're going to be scalping probably. You're in and out. You want to be grabbing points or grabbing ticks, whatever it may be. You might be trading the ES or the YM or the Russell, whatever. You're in and out, and the same approach applies equally to stocks, of course. You can apply this equally well to stocks. You have stock charts with on tick. The principle is identical. So that is the advantage of using tick charts to trade as an intraday trader. Now, there's one big issue, of course, with tick charts, and the question is, when you arrive to set up your tick chart, and before I go on to that, let me just show you, let me just explain what I was talking about there in terms of the deconstruction of the candles, if you will. If you look at these are equivalent charts. So we've got a 30-second chart here, and this is the equivalent in terms of tick. And I'll explain where those tick values are derived from in a moment. But basically, once you look at it, you notice that you start to see things. For example, in this sort of phase of price action here, you get a much more demonstrable phase of price action here. In other words, the move is broken out. It's broken out into these areas of chart which are much more demonstrable. As I explained earlier, you see far more candles in the moves. Obviously, in congestion phases, the same principle applies. But when you start to see momentum revealed, and really that's what this is all about, you start to see these extended moves, lots of candles expressed in the move higher. And even, for example, over here we are, you can see 11.14, 11.15 over here. This upward candle, yeah, it's weakness coming in. But in terms of the tick chart here, we actually get two candles as opposed to one over here. And of course, in a fast-moving market, you would get an awful lot more. So the question is, and this is the big disadvantage in terms of trading on tick charts, what do you set your tick speed to? Do you guess? Do you go and ask a friend? Do you have a look in the forums? Where do you go? And I can assure you there'll be a lot of people around say, oh, well, for trading gold, I use this tick setting and it works for me. And I use something else for trading the ES and so on and so forth. We're a little bit more scientific than that. And what we've done, and that is one of the primary reasons we developed the tick speedometer, which, as the name suggests, delivers the optimal tick setting for you. There's no guesswork involved. It does it through the algorithm, and you are then trading at the optimal tick speed for that particular instrument at that particular time. And this is also another facet of tick trading which seems to escape most traders. Two things. First of all, the tick settings change throughout the day. This is not a set and forget type approach where you say, well, I'm going to trade on my 34 tick chart and that's going to be it for the rest of the day. Because this changes, and again, it's common sense when you think about it. We're trading Globex here, so the price action is relatively muted. It's relatively even paced, because once the cash markets open, this market will explode in activity, volume will explode, and momentum will explode also, and the markets will take off. And at that point, clearly, as you would expect, this tick setting that we have here will change, as indeed it will change throughout the session itself. So that is the first point, and indeed I'll explain what this is in a moment, but as you can see over here, this has actually changed already. And that is the point. This is a living thing. This is the market changes constantly. It speeds up, it slows down. That is reflected in the tick chart. You should be trading the optimal tick chart for that particular instrument at that particular point of the trading session. And this is the second point about the instrument itself. Each and every instrument, whether it's a stock in the cash market, whether it's a future such as this, it will have its own unique characteristic, its own personality, if you like. The tick chart settings that you would use for the ES, for example, will be very different to those for the NQ, and they in turn will be very different to those for the YM, and the same for the Russell. You know, they will all be very, very different. The most volatile, of course, is the ES. It's most heavily traded, has the most algos trading in there. Not at the moment, but they tend to kick in once the cash market's open. So every instrument has its own unique personality, its own characteristic. And so this is another facet of trading on a tick chart. So we developed the tick speedometer. And as the name suggests, it delivers the optimal setting for that particular instrument at that particular time of the trading day. So let me walk you through the tick speedometer, what it does and how it works. Okay, so on the left here, we have two time-based charts. The first is at 30-second, and the second is at a minute. I just wanted to keep these relatively fast, just so we keep the price action. As I say, we're trading on Globex. Now, what the tick speedometer does, it delivers the optimal setting for you in one of two ways. And they are delivered here. So for the NQ right now, we have a choice between either 21 ticks, although it's actually changed now, it's gone to 34 ticks, there we are. So we've got 34, or let's say 35 there on the actual. Now, why have we delivered two numbers for you rather than just one? And the answer is this. Because when you're trading in Globex, as we are here, we could probably take the actual, which would not change dramatically at any rate. It would be around this level. You can see it's relatively stable around 36. It's now dropped to 30, 31, but it's around the sort of mid-30s region, which is fine when you're trading on the actual and it's not moving around very quickly. But when the cash and Globex markets are running in parallel, this moves rapidly. These numbers here will be into hundreds. And that's why we developed the second number here, which is a mathematical fix, if you like. It's not really to do with Fibonacci in the sense of Fibonacci on the chart. It's just a mathematical way for us to get a number which is close to the actual, which doesn't change quite so frequently. So when you're trading on, the rule of thumb I always give is this. When you're trading on Globex only, as we are here, then it's perfectly fine to use the actual, which will be close enough because it's not going to change hugely. But when you're trading in the cash and Globex running in parallel, we always recommend you use the this number here, the second number, which will change less frequently. So you don't have to change your charts quite that often. You will have to change them intraday, as I've explained, for the reason that this momentum in the market speeds up and slows down, and that is reflected in the setting for your tick chart. It's as simple as that. So that is where those numbers are derived from, and that's why you have two of them. And the same applies here. As you can see, we're running on a 55 tick chart here. So I've got this running on the Fibonacci number, which is relatively close to the actual, which is 81. But of course, we could change this to, let's say, 80, somewhere around that region, and we're not going to be many ticks away from the actual if we use that particular setting for the time being. So that will be fine. So that's where the tick numbers are derived from, and that is how you set up your tick charts. And it doesn't matter what particular instrument you're trading, this indicator will deliver those optimal settings. Now you can also see down at the bottom that we've got the tick activity here, and it's also color coded. We've got some green here, we've got some orange, we've got little bits of red punctuated with green, a little bit of red coming in over here. And that is also reflective in the traffic light system here at the top, but this is red, amber and green. And as tick traders, as I've tried to explain in this video, when you're trading on momentum, what you really want to see is momentum, because in other words, you want to see the price chart or your tick chart moving in either orange or in green, because that will reflect average, if you like, for orange, which is, you know, we're trading along on a nice sort of even keel, even pace price momentum. And on green is when you get the punctuated with big increases in tick activity. You know, that is good. It means there's price action, the spreads are widening, there's lots of participation, etc., etc., and therefore you expect to see momentum in the market. So from a trading perspective, what we want to see all the time in terms of our traffic light system over here, we want to see this running in orange and green, flip-flopping between the two. And when it goes into red, what we're seeing is a lack of participation. We expect spreads to narrow. We expect congestion phases to follow. It's not a point at which we want to trade. So it's a great visual way of giving you a heads up as to the optimal times to be trading. And I'm going to do a lot more videos on this, and I'll show you running this in multiple time frames and various other aspects of putting the whole thing together from a trading perspective. But that is the basic principle of the tick speedometer, how it works, and why we developed it. Now, there is one other aspect to it as well, and this goes to the heart of the volume price analysis methodology, which you may or may not be using. But it's another reason that we developed this indicator, because what it allows us to do is to blend all the benefits of trading using the volume price methodology, where we're looking at tick volume down here and we're looking at the associated price action to give us a heads up on the buying and selling, the anomalies and everything else associated with the volume price analysis methodology. But it allows us to trade on all the advantages I've outlined in terms of trading using tick charts. So it's a blend of two perfect approaches, if you will: the volume price analysis methodology based on time-based charts, and all the advantages of trading on tick charts, momentum, the seeing inside the candles and everything else. It's just a terrific blend of two very different technologies through the prism of the tick speedometer indicator. So, are you going to be one of those traders who guesses at the tick setting for your particular tick charts? Or perhaps ask someone, or goes to a forum, whatever it may be. But basically, you have no idea what that tick setting should be for that particular instrument in that particular session of the trading day. So I hope the answer to that is no, and that you will consider the tick speedometer indicator, because what it will do for you, it will deliver those optimal settings. It'll tell you precisely what settings you require for that particular instrument at that particular time of the trading day. So I'm going to leave that there, covered quite a lot. I'm going to do some more videos on this. I hope you've enjoyed this particular video. Hope it's perhaps explained a little bit about tick charts and why they are so advantageous, and obviously the big disadvantage with them, which hopefully we've addressed with the tick speedometer indicator. So thanks for watching. See you again soon, and bye for now.